Yeah, I mean, orthogonal to ETH, it's like, ETH is the ETH, kind of supply overhang. Mount Gox is the BTC overhang. I think like to get to the mainstream, all these assets are going to have to deal with these large unlocks. And I think, BlackRock was out today saying that there won't be another crypto ETF for, a long time. I don't know what that means, maybe like a year or two, but Solana's going to have to deal with this too, with the 41 million tokens that were unlocked from the FTX estate, which is probably more like 50 million today, just given the staking yield. So like every single asset needs to deal with their supply overhang. It's just not worth a ton of intellectual effort to try to decode where things are today in terms of where they're going to be in the future.
Hey everyone, this episode is brought to you by Sei. After several months of effort, Sei's V2 launch is live. Woo! Let's go and introduce the first high-performance parallelized VM to the world. Stay up to date by following Sei at Sei, that's SEI Network, or you can experience the speed firsthand at sei.io today. Thank you very much for being a partner to Bell Curve Sei. Hey everyone, this episode is brought to you by re.al, a new permissionless L2 built on the Arbitrum Orbit stack by DeFi natives for DeFi natives for tokenized real-world assets. It's a very cool chain. Highly recommend that you go check it out. And they just started their rewards program. So you can type in re.al/rewards. You can use the code in the show notes below. All right, thanks everyone. On with the show.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another Roundup episode of Bell Curve. You got Michaels 1 and 2. Vance, how you fellas doing?
Doing good. ETH ETF is looking strong. Grayscale's speed running the redemption process, so it's looking good.
Yeah. I mean, it's just a massive victory to get the. I still kind of can't believe that we got the ETFs when we did. And I was talking to, I don't know if you guys know Quinn Thompson from Lecker. We just recorded an episode with him earlier today, and he was just describing how I think basically a bunch of people were hedging their ETH exposure with futures, and so they sort of unwound that trade once the ETF went live, and it sort of sped run a bunch of the outflows. So I feel like we kind of just moved a bunch of that supply out of the way, and it should be, pretty clear skies from here. I don't know what your guys' thoughts are.
Grayscale put out a chart. Let's see if I can find it quickly. But it was the GBTC and ETH relative outflows per day. And I mean, it's speed running what happened. I can't find it, but it's moving a lot faster than what was expected based off of the GBTC outflows. And I wouldn't be surprised if we see this thing basically done in the next, Vance and I were talking about this yesterday, probably the next 10-ish trading days is where you will probably see this thing stop or generally outflows begin to curtail, just like they saw after, I think it was about 20 trading days, so about twice as long for GBTC. Seems like it's moving about twice as fast.
The other thing that's kind of always remarkable to me is just like the lack of like research or thoughtfulness in terms of like what happened with the Bitcoin ETF. Okay, what's going to happen with the ETH ETF? And really kind of the difference, there is no difference right now. When Bitcoin went live and Grayscale was selling their GBTC, ETH BTC went up. When GBTC went live and was selling all their BTC, ETH BTC went up. Now that ETH is selling all their ETH BTC went down. And so really what you're playing for is the next, in 2 weeks, the next year or two of flows. That's kind of when you'll know what the steady state is. And I think I just read that Mt. Gox is like only 39% done distributing.
No, more than that now. Bitstamp just put out a tweet saying that they have distributed to all of their creditors, and Kraken did this 2 days ago. I think together those were like 2/3 of the Mt. Gox distributions.
Yeah, I mean, orthogonal to ETH, it's like, ETH is the ETH, kind of supply overhang. Mt. Gox is the BTC overhang. I think like to get to the mainstream, all these assets are going to have to deal with these large unlocks. And I think, BlackRock was out today saying that there won't be another crypto ETF for, a long time. I don't know what that means, maybe like a year or two, but Solana's going to have to deal with this too, with the 41 million tokens that were unlocked from the FTX estate, which is probably more like 50 million today, just given the staking yield. So like every single asset needs to deal with their supply overhang. It's just not worth a ton of intellectual effort to try to decode where things are today in terms of where they're going to be in the future.
Yeah, and the Solana one, in that discount, in that unlocking schedule, April 2025 was the big unlock where out of the 4 years of the future unlocking that was going to be linear over the next 4 years monthly, there was a big unlock. I think 13% of it was unlocking April 2025.
Yeah. Well, I think there was the 1000X podcast on the Empire feed. There's a guy, Chiefing Za, who came on, who I really liked his take here, who kind of laid out a pretty bullish thesis for ETH at the current moment, which is just, I don't know. I think that, and I've been thinking this recently because there's been a lot of pushback on the roll-up centric roadmap for ETH and stuff like that. And I just don't really think that matters very much right now. I think once the major, my sort of framework for this is once there's going to be a small handful of crypto assets that graduate to the majors and get TradFi buyers. And then the price discovery and the narrative is going to kind of gradually shift towards that side of things. That's what's in the driver's seat for price discovery here. So all of this discourse and semantic arguments that happen on crypto Twitter when it comes to ETH price discovery is probably irrelevant. And the point that Chiefing Za made that I thought was actually a pretty interesting one was okay, even if there is some validity to the idea that ETH's a little bit in between narratives right now, it's they're about to get access to the BlackRock and Fidelity sales forces of the world. They're gonna come up with a great narrative. No one does it better than those guys. So it's almost an opportunity to get in before, Bitcoin does this through the years as well. It used to be payments, now it's store value. Just get in before the next narrative gets formed here, and it's an opportunity.
There was I haven't heard from him in a while, but do you guys remember Hal from NRD?
Yeah.
And
what happened?
And
he stopped tweeting. He used to rip tweets all the time. Yeah.
Who knows? I hope he's doing well out there. But one of the things that he was kind of the first to really kind of push the narrative on was that it's not value that drives price; it's actually flows that drive price. And I think that this is kind of what you're saying, Mike, which is it doesn't matter what the narrative is, what the business model is, what's happening. What really matters, at least in the medium term, let's think in the next quarters to years, is what are the flows. And let's just break down, Ethereum, for instance. 40% of Ethereum is locked up either in bridges or in staking contract or in the staking contract, or being used as a collateral asset within DeFi. The other thing that was announced yesterday at Bitcoin 2024 was the head of digital assets from BlackRock said likely by the end of this year or likely this year, you'll start to see the wirehouses, the managed IRA money, the $18 trillion of assets that these ETFs were supposedly going to unlock. Those will come online for the Bitcoin ETF sometime this year, is basically what he said. And so that's obviously an attractive proposition from a flows perspective. 85%, I think, is what Kathy Wood said, of the activity that's happened in the Bitcoin ETF so far has just been self-directed money. It hasn't been third-party managed money. Once again, all of the money is in the third-party managed money. Mm-hmm. And then going back to it is, with Ethereum, you don't have the same 40% locked or 40% staked, 40% used in some way, shape, or form. And I think that will have an amplification effect because you would assume that after they move from digital gold, they'll move on to the app store of finance as an asset category. So I think broadly the flows are what will drive attractive price action, and then, as we've seen before, the reflexivity takes over. You see, price drive narrative, drive price. So I would say that that's generally how I'm looking at the market over the next 6 to 12 months.
It's also worth talking about the institutional flows are what ETH and Bitcoin are playing for. And like, that's how you take like $1 trillion asset like Bitcoin, make it a $3 or $4 trillion asset. Like, you just need those institutional flows to get there. And I think like ditto for ETH, like how do you take a, I think 400 billion asset and make it, 1 to 2 trillion? And then you kind of look at like, okay, they've hit this escape velocity of some sort. Like, who's competing over the retail flows in crypto today? Like, obviously Solana is capturing a lot of those, but like we haven't even seen like what I think most people believe are going to be the two main L1s this cycle launch. And like, I would define the two real L1s this cycle as like Bera and Monad, and those are just chains with like real differentiated ecosystem, differentiated philosophical takes on how you construct a chain and how you drive fees towards it. And like, it's going to be, I think, kind of a dogfight for these flows, but at the same time, at roughly the same price levels in the last cycle, we had 3 or 4 alt L1s at like 100 billion FTV. You had AVAX, you had Luna, you had Solana, you had, I forget, the phone, the foam acronym, which was super cringe, but like, for us, Solana flipping ETH, we have Solana allocation in our fund, the ecosystem writ large. It's like, can it go 2 or 3x to flip ETH? Maybe, but like, what about the $100 billion target that's on Solana's back? Like, which L1 can capture a fraction of those flows? It's going to be interesting to see. And I think we saw a little bit of that with Celestia probably last year when it made that run to 20 billion FTV. Like, I would expect more of that with the retail flows to take place, especially if there's guidance for no SOL ETF, in the next 1 or 2 years.
I've got a question for you guys. So here's something that I've been thinking about recently, because I've talked to some of the like the Bitcoin L2s and some of the new L1s, and there's people have very different approaches to BD for like getting apps to their ecosystem. And like something common that I've started to see is like, hey, we kind of want to take an opinionated stance and say like, these are the type of entrepreneurs or apps that we want to see building in our ecosystem. And I would just be curious what you guys advise, either like the bear chains of the world or L2s that you might have invested in or anything like that. Because on the one hand, I think there's a fine line between, look, you have to differentiate somehow and say like, these are our people and this is how we're going to attract entrepreneurs to build apps. But on the other hand, like, I can see being like overly judgmental and being like, no, we only want these type of apps, and like ignoring a lot of the like not as productive type things, but that's where all the activity is. So how do you guys think about like L2s or L1 should go about branding themselves? Should they be opinionated about the apps that are building on their ecosystem? Should they not? What do you think about that whole question mark?
I think probably like, we're building for the next billion users is like probably overused and over concentrated on versus like, can we make like a crypto native app ecosystem that is philosophically different, that is, built for users, that doesn't leak fees? Like that's the bear thesis, not to harp on it too much, but like, if you build a DeFi ecosystem and a chain that's all in one, you kind of see that with Bear, you kind of see that with Hyperliquid. Like, I would assume there's a differentiated market for that relative to like, we're going to build Snapchat on chain. And so, I would say that I would focus as an L1 on a different philosophical alignment, more enshrining, more fees going back to the stakeholders of the chain, less fragmentation. Like the mass adoption chain, I just don't think you can aim towards mass adoption and like get yourself there on purpose. Like, you need to start with the huge $2.5 trillion industry that we have already. Like, you can make a big outcome from that. And then L2s, I think, are different than L1s. They're more reliant on the base chain and frankly, like how much TVL you can bring over in their denominated native asset.
I'll tell you one thing that's usually a negative signal, which is if you're getting, as an app developer, if you're getting an allocation of tokens to move your app over into that ecosystem, that's a red flag. And it usually is B chains attracting B minus players who are doing that strategy, and it just is it's a reflexively negative signal. And so I would say, our advice would be to steer clear of those types of situations as much as possible.
Do you get the sense that still happens pretty frequently?
100%.
I do too. And it's like everyone's like, well, we pay a little bit, but these guys pay way more. Like if
Oh,
you ask,
we just got a $4 million grant of XYZ token to build on that chain that nobody's using. Do you think that's a good idea? Absolutely not.
yeah, this is, you know what this reminds me of? There's a timeless like joke post by, I think it's Joseph DeLong, about like what it's like to run a DAO as like a lemonade stand, where it's like you have to vote on this and your friend pays you, you know, $500 to open on the other sidewalk. And it's like, yeah, that's, we can link it in the show notes, but it's pretty timeless. I do want to shout out our so Jito unveiled their staking product. I know you guys are investors in Jito. I have a small bag of Jito myself, so disclosure there. But yeah, I mean, yeah, definitely not framework size bag. But yeah, I mean, they unlaunched their restaking product this week. I've all like Lucas and Co have been on Bell Curve many times. I'm actually interviewing him right after this. And yeah, they unveiled their staking product, and you know, it's pretty amazing, the story of Jito. I think just they started with MEV, which is a really difficult, thorny problem, as we all know, to tackle. I think they correctly intuited the link in between MEV and liquid staking before a lot of other companies sort of figured out that link. And now they're building on that advantage with restaking. And I think they have a really fresh take on it. They unveiled the basic framework, which is there's kind of like this vault platform, which makes it really easy for risk allocators to basically allocate funds to different AVSs, and then an AVS platform, which makes it really easy to spin up your own sort of backend AVS. And my sense is what's cool about this is that they didn't just say, hey, I want to launch like a restaking platform because it's a sexy thing to do. They are deep in the bowels of MEV, and they have a really good understanding of the problem that as you try to scale a network and deal with all this traffic and DOS and these really thorny issues, you have a lot of centralizing infrastructure. And they were like, hey, it would be really cool if we could decentralize some of this centralizing stuff, which just feels very real. So I don't know. What do you guys think in general of like the Jito play?
I mean, so to put it as like a really simplistic version of describing what this means, it's Jito started off as the Lido of Solana. But what Lido Solana actually meant was it was kind of the Lido plus Flashbots of Solana, because they were covering both the staking of Sol in the form of Jito Sol, but they were also block building, which gave them the ability to earn the tip revenue, which is the MEV within Solana. More activity within Solana means more MEV, which means more revenue actually flows towards Jito than in some days Solana itself. What this change enables is this is now the restaking platform as well. And so, choose your restaking protocol. The one with the most TVL is Eigen. So maybe it's Lido, Flashbots plus Eigen for the Solana ecosystem. But I think, taking a 10,000 foot view perspective here is, to your point, Mike, this is impeccable execution, I think, by Lucas and the team. It's understanding the idea maze better and ahead of anybody else in the ecosystem, and being able to operate and move in directions by not only understanding where you are and what gives you an advantage today, but also understanding where open areas of competition could arise, which enable you to have an unfair advantage in those new vectors of competition. And frankly, like the only analogy that I can think of here from an entrepreneurial perspective is what Mark Zuckerberg was doing in the 2010s with Facebook, where he was looking at, okay, it used to be just like a profile page, basically like an online dating form for social. Didn't even have a mobile application that was mobile native. It was a web-based application on mobile. Went out and bought Instagram, went out and bought WhatsApp, and completely blew away, the hole that was mobile in the entire competitive strategy of Facebook. And I think of that as what the team is doing right now. They understand, what has given them the beachhead that they have, the strategy that they have, but they know where to go and where to shore up, strategic imperatives that will just enable them to be a behemoth going forward. So yeah, hats off to them and making this move.
Yeah, I mean, it's a very different ecosystem in terms of its construction and just how new it is, Solana. And so there is room for someone to be all of these things: the Eigen, the Lido, the Flashbots, and like we track it. Like Jito trades like levered Sol as a result, just because it is, it's kind of like the Parrot thing where it's like it's just enshrining all of these fees within Jito, but it is very representative of the economics of Solana, which, frankly, are growing and favorable and interesting. And I'm not surprised to see, a team like Jito take off that has just been grinding for so long and eating glass and real believers in this whole ecosystem.
I'm interested to see what the product market fit looks like for Sol restaking versus ETH. Like there was we did a couple podcast episodes with Lucas back in the day, just talking about some of the different dynamics in liquid staking on Ethereum versus Solana. And there are some pretty big differences, both in terms of path dependency and why the penetration of something like Lido is much deeper in Ethereum than it is in Solana. But I kind of wonder what the differences are going to be in between Solana and Ethereum. And one difference that Ethereum has versus Solana is like Ethereum is much more modular. And so there's much more room for infrastructure. And it's a much more heterogeneous sort of security apparatus. You have a bunch of like different sequencers and data availability layers, and they're all different. And they're all kind of opportunities for restaking. And so I kind of wonder with Solana being a little bit more integrated, what the opportunity set looks like. And then there's this kind of like squishy moneyness of Sol versus ETH, the asset. I also think one thing, we've been doing a restaking season, the interview portion of this show, but I also think that a lot of protocols are going to want to restake with their own tokens as well. Like I think that's going to be huge. So these are all like pretty open questions, but
across chains, they're open questions too. Like we're curious how restaking on ETH will play out.
Yeah.
But it'll be interesting, no doubt.
Yeah, I think so as well. So I guess we'll have to see. Hats off to the Jito team for executing on that and shipping it though. Very good stuff. Hey everyone, this episode is brought to you by Sei. Sei believes that the EVM is here to stay, but they also believe that the EVM in its current iteration lacks performance and scalability for developers. Sei's recent V2 upgrade has introduced the first high-performance parallelized EVM, which coupled lightning-fast block times and finality of just 390 milliseconds. That is sub 400 millisecond block time. Very, very cool. This V2 upgrade unlocks a new design space with 100x the throughput, even the fastest EVM L2. So if you're a developer who spent most of your time building an EVM, you can now build on Sei, faster block times, much quicker finality. You get a lot of the benefits of the environment that you're used to. So if you're a developer, definitely go check them out. And thank you very much, Sei, for sponsoring this episode. Hey everyone, this episode is brought to you by re.al, re.al. They're a new permissionless L2 built on Arbitrum Orbit for tokenized RWAs. So basically they've got this portfolio of real world assets that actually exist out there that generate yields. They import them on chain and find ways to reward their users very creatively. So one of the cool things about re.al is that it's the first L2 where 100% of profits from transaction fees and fees from protocols deployed onto the chain accrue back to the L2 governance token. And currently, I mentioned this at the top of the episode, but they have a reward program going on for early users of the chain where 10% of the RWA tokens are being distributed, which is very cool. So you as a user can go over there and provide concentrated liquidity, trade, borrow, and leverage tokenized RWAs, including T-bills, real estate, and tokenized basis trades. So again, head over to re.al/rewards, and you can use the code found in the show notes here. Tell them that I sent you. Thanks, re.al, for making this possible. All right, I guess there's not really much of a point in talking about it because he hasn't talked about it yet, but Trump is speaking at the Bitcoin conference, which is
it tomorrow? Saturday?
I believe it's tomorrow. Yeah, so by the time this will have aired, we will have heard his talk. Well, I will not have heard it because I will be on a plane to Ireland, but I'll catch the highlights on Twitter.
I mean, just before we get to Trump specifically, but did you see the comments from RFK Jr. yesterday at Bitcoin 2024?
No.
He was at Karate Combat, number one. Just his
shout out Nick Carter, by the way.
Shout out Nick Carter. Way to go. TKO.
Holy moly.
Good.
But RFK Jr. was in the audience, which in and of itself is
so was Hawk Tuah Girl, by the way.
Oh yeah, and they got a photo. But
so funny.
One of the other announcers asked RFK Jr., like, hey, what do you think of Bitcoin? Like, why are you here? And he was like, well, I came last year. I really, did some diligence and did some learning, and I went home and I put most of my wealth into Bitcoin. So I'm bought in. And if memory serves, Bitcoin was pretty low this time last year. So I think RFK might be the most based presidential candidate, even when we've got Trump with multiple NFTs. Like 2 out of 3 are definitely crypto favoring, which is pretty bullish.
Did you guys see that RFK Jr. called for that the United States should buy $618 billion worth of Bitcoin, which is a very specific number. And what that number is the gold reserve that the United States has. So he thought it should
Allegedly.
match. Allegedly. Yeah, allegedly. So yeah, pretty base call, I would say.
I mean, that's the rumor tomorrow, right? That there's going to be some announcement.
There's this, yeah. So this is the rumor that Trump is going to announce something like a strategic Bitcoin reserve. Other countries hold strategic reserves of currency, mostly in US dollars. The United States holds gold. And there's been an argument or like an idea floated about potentially having a strategic Bitcoin reserve. So I'd just be curious. Obviously, we're not going to know until he talks about it. I kind of doubt that he would announce it. Like, why would you announce it live before you bought anything? Isn't that just? But I mean, what do you guys think about the possibility of this actually being real in general?
I think it's probably real. I don't think it's like putting a bid into BTC and like putting it in the treasury. I think it's just not selling the rest of the DOJ holdings. So there's a mechanical difference, but I think, once the first and most important global central bank has crypto on their balance sheet and has acknowledged it as such, it's just going to open the Overton window for everyone else. Like you saw, I think it was like the state of Wisconsin bought Bitcoin, and then like
Michigan,
then New Jersey, and then blah blah blah. It's like scale that up by like 1,000x in terms of the market impact, and I think that's kind of what the knock-on flows from this could be. But Trump wants a weaker dollar. I think it makes sense in that framework to prioritize other assets on the central bank balance sheet. Same with JD Vance.
One question, and I don't know. I mean, all of this news, if we would have had one half of it in 2021, I mean, where would you predict prices be today? Otherwise, like
minimum 100K. But I think like you just are digesting all of this news in a very uncertain time where it's like, oh, is the presidential race tied again? Does this matter? Is this going to happen? I think next week we'll have better polls on the candidacies of both. And that's kind of when you'll actually price in. And the last thing is like, sure, we'd be at 100K and 10K if this was happening in 2021. But, we are working through the GBTC flows, the ETH flows, the GOX flows. Like, we're just chewing through this stuff. And I'm surprised we're as high as we are in light of that. Like, Michael and I were talking, like, where's BTC if GOX flows come out? It's like, fuck, maybe like back down to 50. But the strength of this asset class is strong. It's impressive.
The macro is pretty favorable at the moment. I don't know if you guys saw Bill Dudley, who's a really influential chairman. He wrote an op-ed that the Fed needs to cut rates now. He wrote a pretty influential one, basically saying the opposite a couple of years ago at a very different time in the cycle. But people like him because there's this old trope about the chairman and chairwomen can't speak honestly until they're actually out of the Fed, and so people listen when he writes an op-ed like that. So I don't know. I think it's just a sign of the zeitgeist and how they're probably thinking about things.
But I mean, next week's the FOMC. I don't think there's any cuts going to happen then.
I don't think so either. No. But I think people get a sense. It's like, does it really matter if there's 1 or 2 or 3 25 basis point cuts? I think it's just that rates have been high for a long time and people want to know the direction.
I mean, look, I actually am going through the process finally after, First Republic transitioned to Chase to like getting a different bank account. So finally signed the docs like in the last 48 hours, but for a new bank account and have a money market account attached with it. And it's like the money market account comes at 4.6%. And all you gotta do is like use it as your savings account, and it like auto balances if you're over or under the 250K limit. Like there's an interesting kind of attractive model there, and it made me think that okay, at what price point would it actually drive me? And I'm not the prototypical person to use for this analysis, but what is going to be the rate cut that drives most of the money that is now hitting all-time highs in money markets actually out of the money markets? Is it a 50 basis point cut? Is it 75? Is it 100? Like, where do we actually start to see those flows of cash? Because ultimately, that's what you need for risk assets. It's not just the fact that you're going to have, rate cuts means terminal value goes up, yes, but there also have to be flows. To bring it back to our original conversation point, flows are what will dictate price in the shorter term. And so where does that money come from? Who's the net new buyer? And that's the big question. My guess is it's going to be money market capital moving into assets. And what's going to be that rate cut price point where you start to see the $14 trillion of money markets actually flow into a new category? I don't know. But, even if it's 25 basis points, it's like, okay, cool. So I go from 4.6 to 4.5, 4.4, 4.3. Like, it's not that big of a difference.
No, you're right. It's just tough to know, right? It's tough. There is, I mean, it clearly matters, right? Like 5%, just get 5% for doing nothing but holding your money in a bank account is meaningful. Like it's definitely, I think they're right that it's, stealing some of the money that otherwise could go into the stock market or crypto or something like that. So, I mean, stealing is the wrong word, but you know what I mean.
Relative rebalancing.
Yeah. So actually, on that same, actually, maybe hold that thought about like what would it take for you to, allocate out of something like a money market fund. I want to give a shout out actually to Aave. So Aave just they've got something in the works, which is they're an AAVEnomics update. So this was published by Mark Zeller, and this is building on some of the work, which is a change to their Aave safety module called Umbrella. So basically, I think it's actually a very cool update. And here, I'm going to actually share my screen here. Shout out to Sonia Kim, one of the chefs at Steakhouse, for putting together this graphic. But basically, the way that it used to work with Aave is just like they're a borrow lend protocol, and so they have to be concerned with bad debt, right? So let's say someone spins up a pool and bad debt ends up getting created. There has to be some sort of backstop. And historically, what the backstop has been for Aave is staked Aave plus the treasury. So the challenge with that is one, it kind of puts a little bit of a ceiling it makes you question whether or not you want to own Aave, right? Because in the event that Aave had to actually make up some bad debt, they would have to sell Aave out into the market, which could cause this like negative reinforcing price cycle. The other thing is it's actually really expensive because they're aware that this dynamic might one day take place. They have to pay a lot for secondary liquidity. And so it's kind of bad from both angles, right? Like Aave has to pay out a bunch to incentivize the secondary liquidity. And they also, investors probably handicap Aave the token because they know that there's this like black swan event that might end up happening. So what the Umbrella proposal is, to simplify, is they're changing what the reserve asset is to make it on a pool by pool basis, A tokens. So now, like, let's say you are, contributing to a pool of like USDC, wrapped ETH or something like that. What you can do when you get your interest token, your A token, which generates interest, is you can opt into staking it, which gets you additional rewards, but you're also acting as a backstop for that pool. And so what ends up happening there is instead of actually needing to sell Aave to make up the bad debt for like a wrapped ETH pool, which might be a totally different token, you can actually, just because some people opted into being the backstop and earning rewards, you can just burn some of the asset side of the balance sheet and level things out. So it's actually like a pretty neat mechanism. And actually, I guess the analogy would be loosely in a bank, right? Instead of having like the bank surplus or like equity capital bail you out, you could be a depositor and say, hey, I know I'm getting like whatever measly percentage that I get in my high yield savings account, but I'm going to opt into this additional level of risk and get, the bank would pay me out more yield. And so, yeah, it's a pretty cool update. And actually, the Aave token responded pretty well to it in general. And I think this is on this general theme of these like DeFi 1.0 protocols that have just been chugging along and actually making improvements and are generating cash flows. Like, I don't know. I know people have been calling for this for a while, but I think these sorts of protocols are going to do well into the future. But I don't know. What do you guys think?
So if there's bad debt, basically you as an A token holder are taking on that risk, but you're earning like super pro rata rewards and interest to kind of like stay put, right?
Exactly. Yeah.
I think it's
And I think you opt in by staking your A tokens.
Exactly.
got it.
So instead of it being you're staking your Aave, which in this analogy would be something akin to like the bank equity, you're actually staking your like credit or your like deposit receipt, and you're saying, "Hey, I've deposited. I'm earning a yield just by holding this thing, which is the A token, but I actually want to earn more. I'm going to stake this as the backstop collateral to earn an additional yield."
Yeah, I mean, I think it's a really good idea in theory where the bad debt is like a not so meaningful part of the total overall TVL and like, percentage of a token market cap. I don't think they'd have any, blow ups that would like mean like 50% of the TVL is bad debt. But, if it gets any higher than like 20 or 30%, I think that's where you as an A token holder would be a little bit hesitant to probably stake. It's like when SBF was saying like hey, deposit your money in FTX and we're going to give you super high interest rates, and a few people actually did that, and not the same thing because there's transparency and there's more just information symmetry, but yeah, I think it's a good idea. I don't think the death spiral was ever really a concern for me, but yeah, I mean, it's a step forward, and these DeFi 1.0 protocols are starting to print cash and turn it around and buy back their own token. And I think that's the long-term prognosis for basically every protocol that is going to be successful, is you have to make these switches.
Yeah,
Yeah.
I do think that it is preventing of more potential of a debt spiral, just because you sell Aave, people have staked Aave, drives the price of Aave down. It like that's where you would get the
There's
reflexivity,
slippage.
and there's slippage and like all that. It like what I would so to your point, I think what this does is it frees up sort of the Aave token from being beholden to being the like line of last defense, which is beneficial because you don't have to have Aave holders worry about that anymore. And I think that they've gotten to the point of maturity now when that's the case. And this is a fundamentally positive move in that direction. What I think would be really interesting that we're also starting to see with some of these, DeFi 1.0 tokens is actually having, the revenues that are generated in excess of that backstop go towards the tokens themselves. And I think that would be sort of the next iteration of a protocol upgrade. Not to say that they're doing this or planning this or changing anything, but I would imagine that would be sort of like phase two of making this thing, look and feel like some of the others that are doing similar token models.
Yeah. So that's exactly right. And, just like the other neat thing about this mechanism as well is it matches assets and liabilities. Like if you think of each of these pools as having its own balance sheet, like it neatly does that. You can also do it very quickly. Whereas like the seize and sell model, it's very slow. You actually have to manually seize it, sell it into the market. You can just very automatically, in a really automated way, just do like a really quick burn and like balance things back out. So it's a more elegant mechanism, and there's some like buyback program as well. Like they're going out into the market and buying some actual Aave tokens. So yeah, it's just like this long fix of like tokenomics on some of these older DeFi protocols. And what would also be nice just now that like politics and regulation stuff is all up in the air. I think I was listening to this old like Microsoft episode. And actually, one of the early challenges for Microsoft is that software wasn't protected under IP law. Like it just wasn't included, right? And they had to fight this out in courts for a number of years to change like the wording on like intellectual property legislation to include software. And so it's just really, I just want to iterate to people, it's very difficult to build like things that look like equity value when the courts are and legislators aren't being supportive and creating frameworks here. So I think that's been one of the big things that's been missing in terms of actually creating value in some of these like older quote unquote less sexy DeFi protocols, and I hope that will change relatively soon. So
agreed.
Concur.
Like where do you guys land in terms of, obviously we know how the Trump Vance camp is. Where do you guys land in terms of where you think kind of like the net Kamala ex vice president person, whoever it may be, will land in terms of crypto? It's like there was the rumor that she was talking Bitcoin 2024. That didn't go through. Apparently she declined the offer. From like a strategic standpoint, I think it would make a lot of sense for her to pivot towards the crypto industry because it cuts a lot of energy off from what you currently have with the Republican campaign. But I just don't know if, like, obviously that wouldn't be genuine. It would feel like more of a move or a tact from a campaigning perspective, not necessarily a regulating perspective. But I'm just curious your guys' thoughts.
Better than Biden. But I mean, I'm probably in the minority that I think Kamala is a much weaker candidate than Joe Biden. So I don't think I'm not like currently thinking through like what does a Kamala Harris administration look like, and like the reason I say that is you look at all of the most recent polls, and Kamala does a little bit better with African Americans, a little bit better with Hispanics. Those are each 10% of the electorate in terms of people who vote. But the place she does much, much worse with is Caucasian people. And, there's 150 million votes, basically, 2020, 2016, but 100 million of those are Caucasian people. So it's great that, she's doing better in the minorities, but like, what did Obama do differently? He won 96% of the African American vote. She's not even close to that. And then he got all the boomers to vote for him too, that are white. And until that changes, like I think she's going to lose in an absolute landslide. And I don't know what a Kamala Harris administration looks like. The early tea leaves are that it would be more favorable to business, but she's got 100 days to define her policy platform. It's going to be really tough to do that while Trump is just playing these 2019, 2020, candidate videos for her in the primary about, all this pretty far left stuff. So, she's got a lot of work to do, but anybody but Biden is kind of my mantra. I would much prefer her to Biden in a world where we had all those theoretical, choices.
Yeah. I mean, look, the analogy that I was thinking through is like basically what has happened is you had, this is the NBA finals. And in the last, 5 minutes, you had a massive comeback from down like 15 points to now they've just sunk a 3-pointer and the game is tied going into the end of regulation. And it's like, now we get to start overtime. And overtime means you're resetting the entire game and you got another set of minutes on the clock. But it does kind of, ask the question of like, what is the platform going to be? What are going to be the new policy initiatives? I mean, she has also seen kind of basically the entire Republican playbook and is now going to be able to counter position against it. Like there's a lot of interesting stuff that I think will start to come out, Vance, your point on polls, but also just like platform in the next week or two. That I think will be sort of the defining characteristics here as to, where industries start to line up. And yeah, it's going to be fascinating.
I mean, maybe a little prediction here, but in 2 weeks' time, we're probably going to see Kamala losing by the same or worse margins than Biden. Because really, Biden's strength was those white voters, those old boomers that hate Trump. My parents hate Trump. I think Michael's parents are the same. But, it's just a totally different dynamic. But, it's possible to both love the boomers and also hate them in some ways. But they're a huge piece of the electorate. They're basically all that matters. And if she can't win those folks, it's going to be an absolute car crash for her, is my guess. And so the Kamala bullishness that we're seeing today, I would put a ton of stock in that.
I mean, this is also the Kamala honeymoon period,
Yeah.
where everybody's coming out in support. You have that cheesy video of the call from the Obamas.
Oh my God. Good. And then the other thing that's funny is they're like, and now just wait for the DNC bump. It's like, bro, this is the bump. This is it.
There are some early tea leaves that there will, in the head-to-head race, it is a little bit closer. It's not, in favor of Kamala, slightly ahead of where Biden was in most of the swing states. But the one variable that is still in play is how does RFK Jr. affect those polls? And at least initially, in the non-head-to-head, it seems like he is actually pulling more from Trump than he is from Kamala, which will be interesting to see if that continues to play out in the next couple of weeks. Granted, he's got to get on the ballots for him to actually be a factor in those states. But it does kind of beg the question. It seems like he, going into prior to Biden dropping out, he was pulling more from Biden than he was from Trump. That may reverse. Would be my early prediction.
You know what resonated with me? I was just trying to pull this article up, but Jon Stewart put this thing out. It was like, are the reporters even reading their own articles? Like, it's whiplashing around so much. You see that the coverage, like before, the Trump assassination attempt, post, I mean, just how much it's changed. And then, within days, the flip-flop of opinion here has just made it so difficult to get a sense of what's going on. And I get it. Like, no one really knows what is going on. All these things are happening in real time and people are changing their opinions, but it's just felt like the coverage on this has been really chaotic and whipsawy. And I agree with you. I don't think we know much of anything right now. And I'm not really, all these statistics about Kamala raising a bunch of money or this kind of like, hurrah, like, I'll believe it when it's been more sustained. I'm not sophisticated enough in the political scene to like have an opinion about how different her administration is going to be. I just don't know. It's been, I don't know if you guys listened to the Ben and Mark Andreessen podcast on, that was actually really helpful for me because
we talked about it last time.
Yeah. But I don't have this background of like working with, the government. And then I haven't seen one administration versus another. And I just don't know. Right. So hearing from them just how different it's been was like very illuminating for me. And yeah, I mean, I'm kind of sympathetic to both views. Like, you see these takes on Twitter where, we shouldn't be shitting on the Democrats for engaging. But at the same time, I kind of think you got to, I'll believe it when I see it. And there's like real change and it doesn't just feel reactive. Like, I feel like that's the fair take here. So I don't know. I will say, I also think it's really interesting to watch. I'm generally a skeptic of people saying the media sucks and they're evil and they're ruining the US. Like, I always push back on that. But I have to say, like, dude, they've been doing not such a great job. And honestly, Polymarket has been doing kind of a better job than the media of calling a lot of this stuff out. And there's some, they work synergistically, right? Like Polymarket responds to media stories a lot of so, take that with a grain of salt. But I mean, come on, if you'd only been looking at Polymarket or only looking at the media, you'd probably do better only looking at Polymarket. So
100%.
The other one is, remember when Vitalik posted that, like, against being a single issue crypto voter? Like, that was kind of like the height of the Trump Twitter, tirades, Selkis et al. And as soon as he posted that, I was like, oh, fuck, he's going to get canceled here. But as per usual, the man is prescient. It's kind of more of an even race now. There's more bipartisan nature to it. Like, Don't fade Vitalik.
What do you guys have any fun weekend plans? Any you guys doing anything good?
Man, I feel like each weekend right now, it's crunch time for Framework. It's like I'm like recharge mode, like plug myself into the wall and sit there.
Yeah, like don't go into a dark room and emerge Monday morning.
Yeah, ready for more battle.
Are you spending more time in New York or San Francisco these days?
Probably both. I mean, I'm about to do a New York run, but I have been in SF for a while, and when you got LPs, you go to them wherever they may be or wherever they want to go.
Yeah. Well, you guys have the 5-year coming up. That's very exciting, man. Congratulations. 5, baby. That's awesome. Yeah, I'm sad to miss that. I've got this Canada trip that's been on the calendar forever, but
enjoy it.
I'm out like the next 3 weeks. Honestly, New York is no fun in the summer. It's like you don't really want to be here. It was 95 degrees a couple weeks ago for the entire week. It's just terrible. Yeah.
Thank you.
No thanks.
Yeah.
Should we end it here?
Yeah. We can end it, fellas. All right. See you guys next week.
Good times.
All right, guys. One more shout out here to this episode's title sponsor, Sei. There are a ton of reasons to build on Sei. If you're itching to get started building or using the ecosystem, head over to sei.io. That's sei.io. Get started, and be sure to let them know that we sent you. Thank you, Sei.